Good morning, everyone, and welcome to the pre-market analysis and trade plan setup for Tuesday, September the 23rd. My name is Doug McKay. I am the head moderator here. If you're interested in checking out the chat, it is a Skype chat, at least till the end of the month, where we'll be moving to our new chat site. But send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Always good to have good contacts on Skype anyway. But if you want more information about what we do every day here at Stealth, you can send me a email at d.mckay@stealthtrader.com. So this is a self-organized learning environment. Each morning we come in and I talk about my hypotheses, look at the structure of the market, and look for our trade levels and our targets for the day. Of course, I wouldn't be appropriate if I didn't do the legals, so let me do that. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading features or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors can lose more than initial investment. Nobody here is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see are for education purposes only. Please trade your own plan, do your own due diligence. All right, so I'm going to just break from tradition at the moment. Let me see where we're trading right now. We are trading 79.75. So right now, I posted this in the room a little bit earlier. We've got a inverted cup and handle. You've got the cup, you've got the handle, came in within the 38.2 and the 61.8 retracement. This pattern is valid. I love this pattern because of the fact that it goes in line with the key level for the day, which is going to be that CLVN at 19.80 1/4. This pattern is invalidated if we break above 19.81. So it's perfect. If we stay below and we break below the rim of the inverted cup and handle, which is basically at 1978.50, we've got a nice measured move down to 1976 with extension down to 1972 1/4. I'm really looking at that 72, 73 level if we don't find buyers in around that 76, 77 level. And I'll get to that when we get into the composite and the big picture. But let's start like we always do. Let's take a look at the news today. So we just had core retail sales in Canada, and retail sales month over month didn't really get much of a wiggle from it. We do have HPI month over month at 9 a.m. Eastern. Did I say Central? Sorry, Eastern. And then, of course, we've got FOMC member Powell speaking at 9:20, Flash Manufacturing PMI at 9:45, Richmond Manufacturing at 10, and then later on today we've got another FOMC member, Kocher Lakota, whatever that person's name is. But we've got a fair amount of news. Nothing really major, but you never know what happens when you get a Fed member speaking. So let's go take a look at what I like to do and talk about the macro to the micro view of the market, see where we are within the trends. You can see the trend is still very valid. And I want to point this out because, you get some of these talking heads, they start talking about the sky is falling and the market's turning, and we really don't even get close to violating the long-term trend on the monthly until we break the 1900 level. So I mean, a move down to test the 9 EMA is nothing. I mean, really the violation really happens all the way down on the long term at 1770. Now that's long term, but you get the picture. We're not we're not violating the long-term trend at all. Good slope, great separation, and the trend is intact on the monthly. Going down to the weekly, well, we're coming down to test the 9 EMA again on the weekly. We're losing slope and we're losing some separation, and I'd be watching, this 1978.50, and a move below that could get a move down to test the 20 SMA. Now it says 1955 right now, but my hypothesis will be by the time we get there, it's going to be at 1959.25, and we all know why. 1959.25 is the former microcomposite VPOC from the long-term, microcomposite that runs from the May 26 breakout all the way to, I forget what it's, I think it was September or August the 7th, but we'll take a look at it on the composite. But overall, the trend is still intact on the weekly, but we are seeing some weakness. On the daily, a little bit of a different story. On the daily, we're starting to get a bit of a rollover here, and we've broken below. Yesterday we broke below the 9 and the 20. We've reached that level, and we're trading below it right now. And our fractal low right now is down here at the 1968 area. So keep an eye on that. But we are seeing some weakness on the daily. Let's go take a look at the geometric chart. I've added this fork in this morning. This fork is from the 4-hour, and I like it because we're coming in, and the two longer term upward sloping forks, the long term we've been following for a very long time is this red one, and then I've got the intermediate fork that we've been following for a few months now. We're coming down and testing the center line. We couldn't get back in, and hold above the lower line of the longer term upward sloping fork, and we talked about the destination if we couldn't hold there to come down and test the center line. We were talking about that yesterday in yesterday's session, and we come down and tested it overnight so far. And you can see it is also an energy point with this new downward sloping. So right now, that's going to be a very important level to hold. Of course, I think that the real level is that 1980.25 CLVN. Above that, and then we could come up and retest or the center line of the downward sloping fork at the 1986. And remember, yesterday's VPOC was 1986.50, so it fits really nicely within the geometric. So I just wanted to point that out on the geometric chart. So let's go take a look at the big picture. So before we get into the Globex, I just want to show you the big picture here. So we had this long-term microcomposite that started from the breakout and the gap on the May 27th, and it ran all the way through to the breakout of this balance of 820. The value area high of this longer term is here at this 1970.75, but I've been talking about this 1971.75. But the key level for us today is, we're back inside of this composite right here, or microcomposite, which runs from 9.9 through to 9.16. With the key level at 1980. We've got a double distribution within this microcomposite, and the MCLVN, and more importantly, the long-term CLVN is right here at 1980.25. A break below this 1980.25, I think, brings us down into the 1977.25. Actually, that inverted cup and handle is getting invalidated right now with this move above 81. So scratch that measured move. But I still think if we get back below this 1980.25, I mean, if you look at Pekulski, he says 65. I use the 61.8. You could give it a little bit of leeway to 81.50 on the inverted, but I stick with my rules, so I'm not going to be watching that. But I will be watching this 1980.25. Below, I'd be looking for a rotation down to this 1977.25, which is our microcomposite VPOC. It is also just above the microcomposite value area low that runs through this whole time frame of the breakout of this balance zone from that 819 through to today or yesterday. The value area low is 1976.75. So, you know, we could come down in the balance of the shorter term time frame and test the value area low of the longer term time frame. And any break below the 76, you got the CLVN, the other side of balance, around 77.25 at 76.25, would bring us down, and I'd be looking for a move down to the 73.25. This is where they tried to hold value on that fractal high at 1977.75. It's also the value area low of the shorter time frame last week's microcomposite. You know, is there as well. So a break below that 76 takes us down into the 73 to 72 area with a very key level. Now, say 80.25 is a key level, so is 71.75. Because what happens after 71.75? We're coming into the end of the month, and you know, we're getting to a point. Our month open is all the way up at 1999. And if we get below 1971, then with only a few days left of trading, we could kick into critical mass, and we could get capitulation from the buyers, and we could get a larger rotation down into this double distribution, okay, you know, with the first target at 63.50, but the main target being down here at the 1959.75 or 1959.25, I believe it should be, yes, 59.25, and that, my friends, is the microcomposite from this whole balance area, okay, that we were in from that May 27th to the breakout. So a move below the 71.75 will likely give us a move down to a bigger move down to this double distribution. If we can hold this 1980.25, then I'd be looking for the move up to 82.50. Now, there's two things I want you to look at 82.50. If you look at the overnight, so let's go over to our Globex. Once we came down and we made, first we had that low at 78.50, then they tested it again down here. Oh, nice little Mr. Sneaky to boot too. They found balance around the 80.25, and this is something that I've observed in the past and talked about it in the room, is the fact that as the bulls and the bears fight a long-term price rejection area, a lot of times it'll turn into a short-term price acceptance, and you can see this has happened overnight. So as they battled back and forth, okay, you know, above and below this 1980.25 CLVN, it's actually shifted the VPOC overnight, the Globex VPOC, down to 80.25. Now, the distribution of the profile, we've got basically a double distribution. The LVN that separates the upper distribution to the lower distribution is at 1982.75. That is one tick above the 1982.50. So right now we're trading in between two key areas. So let me move this over. So our overnight low is now down at 77.50. All right, and then we have our key level at 1980.25, which is the CLVN. It is also our overnight VPOC. All right, and I'm going to bring this level to the front. Bring to the front. Oh, let me move this to the back. All right, because the trade level is more importantly, but we know our balance is right here at 80.25, and then our next trade level is going to be this 82.50 to 82.75. Now, the inventory overnight is net short, and I don't think that the shorts are going to get squeezed until we get back inside of yesterday's range and above the LVN from the lower distribution overnight. So, you know, the first thing you want to watch on the open is, do we breach 80.25, or do we come up and test 82.50? You could take the trade in either direction, although I think the safer one is to wait to see how they react at 82.50. If you see responsive sellers stepping in at 82.50, I get short into a retest of the overnight balance and the CLVN at 80.25. And any break below 80.25, you've got to be looking for a move down to take out the overnight low at 77.50, but more importantly, I'd be targeting this 77.25, which is going to be our main target below. So 77.25 gives you a one-tick breach of the overnight low. Remember, we have a 96% probability of taking out the overnight low. I think the 80.25 is going to determine which side we take out. 96% probability of taking out the overnight low or the overnight high. 1980.25, I think, is what's going to determine if it's the low or the high. Currently, right now, our high on the Globex is 87.75, which is just above the 86.50. So we can take this out because we don't need this information anymore and start looking at how this looks. If we get inside of the prior day range, your first target and the key area inside a range is going to be this 1994. This 1984 is your value area low from yesterday. And this is where I'd look for, if they do break into the range, this would be where I'd be looking for the first resistance to come in, is at this 84. If we break above that 84, so I'm going to put that in as a trade area, because these are all going to be targets and they're going to be aggressive scale and entry points at the same time. Come on, go in there for me. Because if we break above 84, then look for a rotation to take out the naked close and the naked VPOC, and that's where I'd say, especially if we hold the 80.25 and leave that 1977.50 overnight low alone, once we get back inside of value, I'd be targeting the naked VPOC, but I'd really be looking for a move up to this 87.50. Why? Because it's the overnight high. It's got a 96% probability, and once you're inside of range, that probability shifts to the high versus the low, especially if it's left over. Plus, it takes us back into right in the balance around the microcomposite VPOC at 87.50. So this day is setting up really nice, okay, to trade off of. So you've got some really good targets with some key levels that could be breached and used to get pretty aggressive today with trades. I mean, always control your risk. Never put on too much risk that your account can't afford. But I think that today is going to be some nice targets. So first target inside of range is going to be the value area low. First target inside of range and value is going to be the naked close at 86.25 with 86.50. Scale aggressively as we come up here, but leave one running and look for continuation up into the 87.50 CLVN. Our first resistance above there is going to be at 88.75. which is basically right at the VWAP, okay, from the prior day. And then if you don't see responsive buyers, then I think once we're in that distribution zone and in the body, in the value area of the prior day, I'd be looking for a destination trade, an 80% value area play all the way up here to this 1990.50. And then a break outside of that value area and above that value, then I think we get into playing ping pong between the two CHVNs at 92 and 87.50. Remember, our former VPOC before it shifted down to 87.50 microcomposite VPOC was at 92. So we still have a double distribution zone on the longer term composite, and if we get above this 1990, I'd be targeting this 1992 and probably chop around between 92 and 87.50. Come on, why won't my buttons work? 92. And then, you know, if we do get up here and we get a nice rally going and the shorts really start getting squeezed, the target above there is going to be the value area high up here at 1996. That's going to be a trade area as well. And then above 96 target the 99.25, and of course the centennial number up here at 2000. Remember, our week open, I'm sorry, our month open is 1999, which is one tick below yesterday. We couldn't hold, you know, above to have a positive week so far. So we're now in a bearish week. So I'd be targeting the 99 just in front of the 99.25, and a break above. I think I don't think 2000 will hold. I'm really looking for the week open and the naked VPOC here at 2002 and 2002.50. So I'm going to target 2002 because that's our week open, but probably get continuation up into the 2003 area to close out that naked close and take out the naked VPOC at 2002.50. First resistance above that is going to be, you know, I think then you get a rally going, and first resistance is going to be up at that 2006, 675, 2006.75. So that's my look at the upper end. I don't think we're going to get much more than that today. If we can't hold this 80.25, it's all about the 77, you know, and a quarter with the lower side of balance and the value area low down here at 76.50 and 76.25. And I'm going to use 76.25. If we don't see responsive buyers stepping in, come on. If we don't see responsive buyers stepping at 76.25, then I think we get a bigger move down, and the first target below is going to be the 73.75. And a major line in the sand is going to be the 71.75. Anything below 71.75, I'm targeting, you know, first the 67.25. 67.25 was our microcomposite VPOC on the September contract. So I'm keeping the September number in there, but the two big numbers below us is going to be the 63.25. 63.25. Come on. And then the big number is going to be, this should be at 59.25. And that's our current former microcomposite VPOC, and it is currently naked. And I'm expecting once we get down here in this distribution zone to, you know, to play ping pong between the two numbers, 63.25 and 59.75, just like we did when in the September contract when it was 71.25 and 67.50. You know, support doesn't really come in until we get down to this 57 area. Come on, draw for me. And then a move below 57, you've got 53.25. and 51. I know these are, pretty far down, but in case we get a major trend day today, I want to make sure we're prepared to the low side. And then the major support below that coming in at 48 and a quarter. All right, so that's what I'm looking at in terms of the ES. Let's just take a quick look at what that looks like on the Renko and Keltner. See how those levels match up. So right now we have our Keltner center line. We've come off of testing the lower Keltner, and our center line is at 81.50. We're rejecting it so far. If we reject it and move down to test the lower Keltner line, is going to take us down into that 75 area. And really, by the time we get there, I think you're going to see it down at 73, 75. If we get above the Keltner center line, a move up to the upper Keltner line is going to take us back into balance at that 1987.50. So that is looking pretty good, even with that inverted cup and handle. Again, Balkalski, he uses 65%, so we really haven't, as long as we stay below that 82, I think 82 level is going to be right about 65%. So, but like I said, I'll be using 1980 and a quarter. We get below that, you see buying, and they're hitting the bid hard. Start selling into that 77.50. If the buyers step in and you start seeing single prints, start and they start hitting the offer, get long of off of 1980 and a quarter. My main hypothesis is the break of 80 and a quarter because we breached it overnight. So I really think we're going to see the 77.50 area again in the RTH session. But my secondary hypothesis is a rotation up to 82.50 and a break above 82.50 into testing the value area low, and I move back up into that 86, 87 area. All right, let's, how are we doing for time? 9:13. Let's quickly take a look at the big picture on the Russell. You can see that we were inside of this this 5-day balance, and yesterday we fell out of balance and broke the key level that we were looking at yesterday at 1131.80, and we were looking to play ping pong in between, a lot of chop in between the 3180 and the 2170. We basically auctioned that whole area yesterday. I don't think we repaired it by this big move down, but we have breached 1121.70. And below 2170, consider that the same as the 1980 and a quarter. This is a very important, this is a bigger number on the Russell than it is the 80 on the ES. Why? Because the long-term composite VPOC is just below us now at 1111.60. And that's going to act like a magnet. We're in price discovery. They've broken a key support line. You've got down at 1113.60, which is just above the VPOC where they found balance after coming down here the last time at 1113.90. So the first target below 1121.70 is this 1113.90 with a very big magnet just below it at 1116. This is the most traded price on the Russell going back to October the 9th, 2013. So if they're in price discovery and looking for buyers, remember the market is not moving down to find more sellers. The market is moving down to advertise to the buyers. Therefore, early sellers then can be buyers, and new buyers can find value and step in. Where did they find value? In this area, below this long-term price rejection at 11.2170, all the way down at 11.1160. So there's a good probability if we cannot get back above 11.2170 that we get a rotation down to pick up buyers with conviction at the spot where they like the most at 11.1160. Might even get some continuation down to 11.08. I'm not expecting much more downside move because that 11.1160 is going to act like a magnet on both sides, and I don't think we're going to just tear through it. It's like a golf ball in the tall grass, like FT71 always says. If we get above the 11.2170, then I see a rotational day, okay, in between the 11.3180 and 11.2170 as we repair. We did not repair this auction with this move down yesterday. We moved down pretty strong and really didn't repair the auction and determine fair value between these two long-term price rejection points. And I still think that's got to happen. I don't know if it's going to be today, but if we do get above the 2170, the first destination I'd be looking at is 11.2380, but a lot of chop in this area, so be careful in there. Don't need much more to say. These are pretty good levels right now on the Russell. The full hypothesis is already posted in the room, so let's just wrap up with gold. Unfortunately, but I got taken out of my gold swing short that I entered on Sunday night of September the 14th. You can scroll back in the room when I was talking about that 15-minute FUBAR Mr. Sneaky Tech Gap is where I entered. I've been running short with it and holding and adjusting my stop. Yesterday, as I told you, I had my stop adjusted down to 12.2480, and I got taken out overnight, which is okay. Left, I don't know, about $1,500 on the table with the low being down at that 12.08. I really thought we'd go down with the breach of that 12.1090. I thought we'd go down and pick up buyers down here at this composite VPOC at 12.06, 40. We just the buyers front ran it and rotated us right back up into balance, in around this 12.35, 12.34 level, and the seller stepped in overnight so far and bringing us back in towards the 3-day balance, which is down here at 11.23, 11.24 area. I anticipate a lot of chop in this area today. We've made two extremes down to the 12.08 and up to the 12.38, and I think we're just going to chop in this area. But if we do get back below 12.90, I think we've got a pretty good trade to get in, to get short at least down to test the low of the range of the 3-day at 12.0880, and more likely a move and a breach down to pick up buyers down here at this 12.0640. To the long side, there's really nothing I would suggest that's a safe trade right now until we get back above 12.4140. I think you're going to get a lot of chop, and the unfortunate part of trading gold is it has a lot of movement, and the chop and the harmonic rotations are fairly large. So you really have to pick your levels very carefully and use the longer term price rejection areas to trade. That's why I don't actually watch a intraday gold chart, because you really got to look at the longer term. As Doug Beal, Ducky used to say, he looks at the 120, and that's right, not the 120, the 180, and that's where his sweet spot is. And mine, I like the 15-minute, but I always put it into context with where we are within the composite and the microcomposites, so looking at it as a long term. Anyway, that's what I'm looking at this morning. As always, trade well, trade safe, and we'll catch you on the flip side.